Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today we mostly will take a look at the euro currency. Our discussion will be on the tactical stuff that we have on intraday charts, but first, just briefly, let's take a look what we have on our other setups. It's in Great British Pound and Australian dollar. In the Great British Pound yesterday, guys, market hasn't given us any chance to take the short position. According to our weekly trading plan, we said that the first trade that we could keep an eye on is possible taking short with the target around 130. So actually, guys, personally, I had the limit entry order at the completion of the harmonic swing here. So I thought that if market will show retracement to 137 there, it will be at least somehow attractive trading on the 70 pips potential here. As you can see, yes, the market hasn't even shown this minor bounce, 3.8 retracement of this personal swing. Its retracement was even smaller. That's why when the market starts coiling around 130.50, it was too late to go short, and actually its potential was very small and not as attractive as it was seemed initially. So, but second trade, as you can see, as we said, second trade should be keep an eye on possible bullish reversal patterns. As you can see, as a result, Great British Pound has formed here the butterfly buy with this minor upward action. At least some upward action has started here, and I don't know what will happen, whether market will continue move higher or but some minor bounces. We have estimated that 130 is very strong support. Well, right now, if you are taking the position on this butterfly, you could move and stop to the break even and watch what will happen, because maybe some larger, wider pattern could be formed here as well. That's just the first bullish pattern that has been formed. In Australian dollar situation is mostly similar, but here we're still waiting for the pattern. This is potential butterfly. It could be formed. That's also could lead us to trying to go long. But right now, let's turn to the euro currency. On the euro currency, guys, situation is a bit tricky because we know that market mostly stands in the long-term resistance areas. 118, 112, 120 area is a long-term resistance on the weekly and monthly chart. Right now, market has reached it. But and on Friday, as you can see, market has shown bounce here. It's in general a bit stronger than previous retracements. You can see black candles are smaller than this one. But at the same time, take a look at market has formed a bullish grabber. So that's not attempt to break the trend down, but market has failed to close above the MACD predictor line. It means that bullish grabber usually suggests the taking out of this top and possible upward. We do not know how strong this upward continuation will be, but grabber suggests just the taking out. This could be just wash and rinse and return right back down, or it will be a real breakout and upward continuation. But this top should be hit by the price in the nearest future. That's why if you're intend to trade on the short side of the market, you should be extra careful with that, because daily pattern overrule the intraday patterns. So the higher time frame is, the stronger patterns it generates. So that's why here we mostly have the directional bullish step on the daily chart. At the same time, in the nearest future, market could fluctuate a bit more inside the range of this candle, and some patterns could be formed there. So on the 4-hour time frame chart, you can see that market hasn't broken this trend line. It stands to the upside. And what's interesting that here the bearish grabber has been formed. That's just dropping down, maybe even to trend line, something of that sort. This leads us to conclusion, guys, that market could form some kind of the Garter's cheap to sell page on the recent drop. Because drop really was not bad, and in the short-term charts, on intraday charts, it has significant bull and bearish momentum still exists, and it could lead to the second leg down. Not necessarily it will be very significant leg, not necessarily the market will take it out of these lows, but some reaction, some attempt at the downward continuation should follow. But the problem is here, guys, is that market could form the shape of this candlestick to different. So for example, right now we already have the candlestick 2, because if you will join this, you can see that actually candlestick 2 suggests some kind of the ABCD action inside of the initial swing. So here we already have the ABCD action because this top is greater than this one. And this is by letter, it's also candlestick 2, but in this case you will have to place stop above this area. And it's too far, it's approximately 80 pips stop. In the current setup, in the current circumstances, it's too much. And this pattern is not worth of this risk. At the same time, what we see here, guys, as you can see on this retracement up, action up, this retracement is really small. It's not even probably 3-8 retracement. And this suggests that upward action here could be a bit higher, longer. At the same time, we have the bearish grabber here in the 4-hour time frame chart. What we could do. So this, guys, it's a bit question of the money management and some personality of the trader. So some traders, for example, in these circumstances will try to take the position based on the grabber, placing stop above this area, above this fib level, trying to go short. If grabber will work, this downward action will start. If not, the stop will be hit, and they will searching for another entry opportunity. In this case, this pattern will be completed. That's the first approach. Here, the stop will be approximately 20 pips, so it's not really significant, but it's still additional risks that you could take. Another chance, another way how to act is to wait when this AB equals CD pattern will be completed. Here is approximately 1865. In this case, you will be able to place just 25-30 pips loss. Stop loss orders, this will be acceptable for a current situation. The target will be A, B, C top, minor 618 extension. I suppose this will be somewhere around 117.65. So it will be 100 pips potential trade. So not bad, not bad. So my personal opinion is just it's better to wait when the EBCD will be completed, because guys, here trying to using the two chances for entry, first on the grabber on the 4-hour time frame chart, later here, it's a bit too much for this pattern. It's not as superb just to pay too much attention to it. So if it will be completed, well, we could trade it because risk will be acceptable, potential trade, potential profit of this pattern also will be solid. In this case, it's worth of our attention. But here, trying to take the position here, placing stop right now is too much. Taking position here, taking risk, and then if it will fail, trying to enter again, this will be also not very attractive. That's why, personally, for me, I prefer to wait when this pattern will be completed. And if market indeed will complete the CPCD pattern, we could trade it. If not, if this market will suddenly start to dropping, the potential of this trade will not be very significant. And just skip it. That's all. Just waiting for some another steps. For example, on Australian dollars, we said it's also forming some interesting setup. So that's our current view on the euro currency. As you can see, mostly the setup is tactical and stands inside of this Friday trading session range. But still, it's interesting. It's rather clear pattern could be formed. Let's see what we will get within the session.